Testing 1, 2, 3. Good morning. Good morning. Let's get this started. Good morning, everybody. 25th of July, 2025. We're at $114,000, $115,000 for Bitcoin, and there are people in chat asking me if this is the bull market. We have the bull market music. That should tell you all you need to know. Good morning, everybody. Kishan. KB is in chat. Alpha, I think Hidden is watching over on Binance. Good morning to you there. Remember, we are now streaming Binance Live, Binance Square, and YouTube. At some point in the very near future, we will also be streaming over on X. But for now, my little old brain can only cope with setting up 3 live streams, not 4. And before we begin, on the right of your screen next to my beautiful head, you will see Mew. This is next Wednesday. Last Wednesday, we had the Wolf Swap quiz. Next Wednesday, we have the Mew quiz. And then I think the week after, we're probably going to have a week off, although that is subject to change. So next Wednesday. Now, I know Mags missed last Wednesday. So if Mags, you do watch this on catch up, make sure you don't miss next Wednesday. It's 7 p.m. Central European time, which I think is 5 p.m. in the UTC world, wherever UTC world is. Now, we have a busy show today, but it's a Friday. So we're going to be a bit more chill than we are during the week. We've got a couple of X-Files, not too many. We're not going to talk about Bitcoin today. We talk about Bitcoin every day. Today, no Bitcoin. We're going to talk about Ethereum. We're going to talk about Solana. We're going to talk about Ethena, which is a stablecoin. We're going to talk about Larson again. We're going to talk about Brokenomics, which is something very close to my heart and something which I've kind of been saying forever. Okay? Now, I don't want to ever be one of those people that sits here and says, I told you so, I told you so. But that's a very important article to me. So we're going to cover that in great detail. Pump, not fun. And we're going to cover Vine. All of those things on the show. And, of course, we're going to look at the markets. What more can you ask for on a Friday morning? I mean, really? Where else do you get this absolute level of alpha at 11 o'clock on a Friday morning? I tell you where. Nowhere else. That's why you need to follow us. Subscribe, like. If you're watching on catch up, leave a comment underneath the video. I know Packer watches the videos on catch up. I know Solo Scan, a few people like that watch the videos on catch up. That's why they're never here. I think we've got about, I would say, 50 to 70 regulars on YouTube, which, considering retail's gone, isn't that bad. We get about 300 to 400 on Binance Square, which I don't think is that bad because it's not even properly live yet. So I don't think we're doing too bad for numbers. What's that? That's probably, let's say, 400 between YouTube and Binance Square. And then Binance Live, we always get a few thousand over there. So I don't think we're doing too badly considering where we were 3 months ago. I think we're doing okay. So, welcome. Should we get into the prices? Bitcoin has absolutely crashed. This is the end of the bull run. 115,000. Now, what's so important about that? I thought we were going to hit 114,000. Don't believe me? Go and have a look at Tuesday's stream. I think I said 114, worst case scenario 112. I think we came down to 114 and something, and that's without looking at a chart, and that's because we've been there before. But look at Ethereum. Ethereum woke up and said, no, I am not going to follow Bitcoin into the depths of hell. We are not going to go and join Aussie on this day. Holding its ground, 3,650. XRP, I'm not expecting XRP to hold $3. 220, 250, 275. And then when we get above 3, we can talk about it. And we blew them away. Now it's time to think about, if we do slightly correct, and let's say the alt's correct, I'm expecting 275 for XRP. I'm not overly bearish on XRP, not in the slightest. Further down, BNB hasn't really moved an awful lot down from its $800 all-time high for BNB. I bought that at $200 just after a stream one day, and I said, I don't hold any BNB. I don't hold any BNB. I think I went and bought, I don't know, was it about 3? And they were about $200. BNB is like gas. You don't know where it came from, but when it hits you, it hits you, okay? That's up a 4x from not that long ago. 2 years ago, 18 months ago. BNB is a silent stalker. It goes up slowly over time. I do think it'll hit $1,000 in this bull run, in the next run up. Maybe $1,500, but people talking about $5,000 for BNB, what are you smoking? It's never going to happen. Solana back at 177. Again, that went over $200. 210 and 230 with the targets. On the way back down, I think I said 173, 180, something like that. Again, fact check me in chat. I'm sure I said 183 and 175, maybe, something around that price. But again, they're good prices. Just because we've had a small correction in the market, it's not over. You know, you look at XRP and it's down 10%. It's at $3.07. It's not down 10% from 30 to 27 cents. It's at $3. My target for the end of this bull run, $5 to $7 for XRP. We got to $3.50. We're almost there. Okay? We can see Blackpool Tower. That's how close we are to the beach. You'll only get that if you live in the north of the UK. Maybe KB will get that reference. What else do we have? Cardano. Again, we've retraced to 80 cents. What are the two numbers for Cardano? 60 and 80. If we correct, again, where do we go? 60 cents. Not rocket science. Hyperliquid is, again, we said this, didn't we? We said the moving trains. Hyperliquid can still go up. But if Hyperliquid gets to 20 billion, Cardano won't be there. Cardano has now got twice the market cap of Hyperliquid. We need to think about whether we want to hold coins outside of the top 10. Do we hold the top 10 and then add a few coins to that? Maybe. Sui is back at 366. Again, that's going to go to $5 at some point, I think. Chainlink, that's going to go way above that. I think I said, and excuse me if I get this wrong, I think I said $60 to $80 for the end of this bull run. We got up towards $20. That's not a bad position for it to be in. And again, we're not going to talk about Bitcoin Cash because it's an absolute pile of trash. Don't trust Bitcoin Cash. AVAX, solid coin at $23. Again, that was over $30. There's still lots of wiggle room. Look at Litecoin, $112. There's still good coins. Still good coins. You can still make profits in this bull run. Just stop expecting 20 and 50x's. That's not the time. Okay? Gainers then. Athena, we're going to talk about that in a minute. That's a big one. That's a really big one for the market. Dow, Curve is up, sorry. Trash Cash is up. XDC is up. Kronos, look at that. 13 cents for Kronos. People were calling for the death of Kronos when it was at 7 and 8 cents. We get an ETF, a blue chip ETF at that. With the orange man himself, Kronos is up. It's going to go up. Maybe not to $1. 60 cents would be my target for Kronos. I know everyone tells me it's going to go to $2.71. I'm not going to believe you. Kronos gets to $2.71. I will have more than $500,000 of Kronos. It ain't happening. It ain't happening, okay? Get that idea out of your head. A few other gainers, probably a couple of losers today. The markets are correcting a little bit. Pump.fun, again, told you not to go anywhere near this. Wait for a retracement. And if you want to buy it near the bottom. That's the way to play this game. I told you, Jupiter, same thing. Jupiter launched. I then waited for it to go below 50 cents. And I started to dollar cost average into Jupiter. Now above 60 odd cents. Again, it was up towards $1.50, $1.40. Pump.fun. I don't think this is the end of Pump.fun, by the way. I'm not saying you go and buy it, because I still think it has a long way to come down. But look at the market cap. 900 million. How much lower is it going to go? 700 million? 600 million? Maybe? I think they've got plans for the token. I'm never going to buy it, but I think they've got plans for the token. And I think what they're doing They've made $2 billion or $1.5 billion out of this. They can quite easily dollar cost average into this token, own most of the token, and have $1 billion on the side. Okay? This wasn't a rug pull. This was one of those games where they pull the tablecloth from under the cutlery, and then you think all the cutlery is going to fall off, and all the cutlery is going to stay on the table. I think they've got plans. Pudgy is down a bit, but who cares? It's up massively. Stacks is down. The coin I don't mention is down. Solana is down. A few losers, but let's not worry about losing. Not on a Friday. Now, apparently, I have a video. I do not know what this is. I prepared this yesterday afternoon. It was a long time ago. I've slept since then. Let's see what video I have in store for you today. When it loads. X is very slow today. I think there might be a problem somewhere in the Ethernet. This is it. Okay. I'll try, so from time to time, it's a pretty little cat, or it's a pretty little dog. But just bear in mind, you buy into crypto, you're the boat, okay? You're the boat in this video. It's always going to be this way. It's either going to be this way and the prices are going up, or it's going to be this way and the prices are going down. And then what's going to happen? You're going to get to your destination, wherever that may be. Delhi, Rotterdam, New York. You're going to get to your destination. And then you're going to have your big bags and you've sold and you've taken a lot of profit. And you know what people are going to call you? People are going to call you lucky. Does this look lucky to you? No. Does Bitcoin drop into 76,000 from 109,000? Is that lucky? No. You get grey hairs being in crypto. It's just part and parcel of the journey. And the more you're in crypto, the less the waves bother you. That's something I want you to take away. Be a ship. Ships very rarely sink. They do, like crypto. Some cryptos do sink. But on the whole, they make it from A to B. And your journey is to get your token from A to B and sell it at the optimal time. Now, this is absolutely fantastic. It has nothing to do with crypto, but how could I not show you this advert? American Eagle make jeans, I think. I don't know. I've watched this advert several times. I've no idea what the advert is about. Okay, I'm going to be completely honest with you. All I can see is Sydney Sweeney. Eric Balchunas put this out there. He reckons they've spent $20 million on this advert. Their market cap is up 20%, which has added about $200 million to the value of American Eagle. Okay? I am not saying what everybody else is saying, nature is healing and all that kind of stuff. What I'm saying is that at the end of the day, these kind of adverts will sell whatever you have to sell. If I was Binance, I would go and get myself whatever she's called. Ariana Grandis? No, I can't remember what she's called. Diarmis? Something like that. I would go and get myself a beautiful, beautiful actress to talk about Binance. That's what I would do. Put ZZ to one side. Richard, really sorry. Look like a very healthy man. Go and get a top tier actress to talk about your project. That's all you got to do. It's absolute basic humanity. And again, don't know what else you can say. Strategy is going to raise another $2 billion to buy Bitcoin. Now, he's buying a lot of Bitcoin. And he's buying it on a monthly basis. And he's been doing it for a long time. Under no circumstances should you be considering selling your Bitcoin unless it is a matter of life or death. Then it's totally understandable. Even then, you can borrow against your Bitcoin. So, every time you think Bitcoin is finished, bring up a picture of this man and look at him. And think to yourself, why is Larry Fink? Why is Michael Saylor? Why are all these men in suits trying to buy as much Bitcoin as possible? And me, I'm sitting there thinking about selling. No. You hold your Bitcoin. You hold your Bitcoin. What did I call it on Tuesday? Bitcoin should be your never sell asset. Is that what I called it? Something like that. Again, UK-based Satsuma Technology just raised $135 million for its new Bitcoin treasury strategy, setting a record for national Bitcoin treasury raises. If the fully amount is converted into Bitcoin, it would make Satsuma the second largest corporate Bitcoin holder in the UK. Again, they're buying Bitcoin. If you are watching this stream and you do not know what to do, and you don't know what coins to buy because there's 11 trillion coins out there, there are pictures of dogs and cats and lizards and snakes, and you don't know what to do and you're scared, you buy Bitcoin. That's it. Buy Bitcoin. Forget everything else. Buy Bitcoin. If you want to make money along the way, learn a lot more about crypto and then think about alts. But your first port of call should always be Bitcoin. Then, when you finish looking at Bitcoin, this is probably one of your next steps. Look at the blue chip alts that are underneath Bitcoin. Solanas, Ethereums of this world. Now, I am going to bring up an article about this, but I thought I'd bring up the tweet first. The Ethereum ETF inflows have flipped Bitcoin inflows every day for the past 5 days. Now, what is so incredible about that? Why does that matter? I'm going to show you very quickly why that matters. Look at the market caps of Bitcoin and look at the market cap of Ethereum. Ethereum is a fifth of the size of Bitcoin. 1/5 of the size. It's performing 5 times better than Bitcoin. The 7-day almost holds that true. 1.5% up, 3% down. That's also a 5% move. Anyway, Ethereum is outperforming Bitcoin. I said this was going to happen. From January, I was saying the Ethereum ETFs, they're really starting to move. Nobody was paying attention to it because everybody was trash talking Ethereum. And I was saying, even though they're not doing that well, Ethereum ETFs are going to come good. And here we are. Ethereum ETFs are coming good. Why? Because it's going to be the next one, the next chosen one, the queen. Bitcoin is the king, Ethereum is the queen. Now, whether you have fault with their blockchain, whether you have fault with Vitalik, and I certainly do, it's the second chosen one. And it doesn't matter what we think. It really does not matter. Nobody cares what we think because we don't care anymore. We've had 14 years to buy Bitcoin. We've had 10 years to buy Ethereum. Don't start moaning now that the men in suits have bought all the Bitcoin and Ethereum. You've had 14 years and 10 years in the case of Ethereum. They are now coming because they realize what valuable assets they are. BlackRock Ethereum ETFs becomes the third fastest ETF in history to hit $10 billion in assets. Okay? 251 days it took. Bitcoin took 34 days. Number 1 and number 3. The first and third fastest growing ETFs that have ever existed, Bitcoin and Ethereum. And we're not talking about crypto ETFs, we're talking about all ETFs. Bloomberg, Eric Balchunas, he comes up again. He's like a nice perfume, that man. You smell it. He leaves the room, you can still smell him. Amazingly, if ETH went from 5 billion to 10 billion in just 10 days, Balchunas noted, calling the surge equivalent of a god candle. That's why we've seen the move. What were we at a few weeks ago? 1,800? Were we at $2,000, $2,200, something like that? Now we're at 3,700. The surge is the equivalent of a god candle, with the milestone ETH-A is now one of the top 3 fastest growing ETFs globally, with each of them being crypto ETFs. In fact, I lied. They're all ETFs. According to the data, 251 days. It puts it up there ahead of the Nasdaq Equity Premium Income ETF, which took 444 days to hit the same mark and currently ranks as the 4th fastest growing ETF in the world. Absolutely insane. While ETH's rapid growth has outpaced many ETFs, it still lags behind the spot Bitcoin ETF. But Bitcoin is 5 times the size of Ethereum. I've said this before. If Ethereum gets a fifth of the capital coming in that Bitcoin gets, it's kind of equivalent. They're on a par. You know, if you've got something that costs $10 and something that costs $2, and somebody buys 10 of each, of course one of them is going to be 5 times the amount, but you're still buying 10 of each. And over time, both of them will have supply shocks. Even though Ethereum doesn't have its fixed 21 million like Bitcoin, its inflation is negligible. I think it hit, was it 121 million, 120 million? How many Ethereum are there? There are 120.7 million Ethereum. Now that is likely to change by less than 1% every year, because there is a mechanism where as transactions go through the Ethereum blockchain, ETH is burnt. And the amount of ETH that is burnt doesn't directly correlate to the amount of ETH paid out via staking. There is a slight disparity. Sometimes the faster Ethereum goes, it actually burns more than is paid out. So Ethereum is deflationary, but there are times when it slows down and it becomes inflationary. But it's like a floating point between, say, 0.9% and minus 1%, something around that. So you're not going to get Solana. Solana increases in volume, 6 or 7% a year. That's not good tokenomics. Ethereum has sound tokenomics, and we're going to talk about that a little bit later. So all in all, you should be super, super happy if you're holding Ethereum. If you'd listened to me, you would certainly have Ethereum, and you should be very, very happy. And you can pat me on the back, and you can send me as big a tip as you want. It will be greatly appreciated. The only thing I don't accept Litecoin from Tariq. That's the only thing that I draw the line under. Right, let's move on. So Ethereum, we're looking good. We're looking good for Ethereum. What about Solana? We've had a failed attempt at $200. Got to 210, didn't we? 209, 213, wherever it was. Now we've fallen back down, but we've found our support again. And this is what's the big news. Again, there's so much happening in crypto, it's nearly impossible to keep up with the news. Good morning, Manjeet, and good morning, Bullish Bull. I hope you are all well. Say hello in chat. Smash the like button. Let me know what you're doing. It's the weekend. What are you going to do this weekend? Don't tell me you're going to sit and look at the charts. That would not be good. Solana has unveiled its 2027 roadmap to lead internet capital markets. The Solana Foundation's roadmap, called Market Microstructures, the most important problem in Solana today. The team behind Solana blockchain has released a long-term roadmap detailing their strategy to make the Solana blockchain the foundational layer of global internet capital markets, ICMs, by 2027, 2 years away. This is a term coined by the Solana Foundation. Akshavi, how am I supposed to pronounce? Should we call him Al? How am I supposed to pronounce that? Akshay. Allowing anyone with an internet connection access to capital markets. Solana's original mission was to build the decentralized backbone for ICMs, according to Solana's new internet capital markets roadmap shared with Cointelegraph. Increasing bandwidth and reducing latency are absolutely necessary, but not sufficient to achieve this, said the paper published on Thursday. Until now, it wasn't clear how the market's microstructure for ICM should differ from TradFi, the roadmap said. The builders have now consolidated around a shared application-controlled execution, which of course stands for ACE. Everyone loves ACE, aiming to give smart contracts millisecond-level control over their transaction ordering. Now, we talk about the fact that I don't consider blockchains, to be in competition with anybody. We say that all the time. They're not in competition with anybody. But we're going to get to the stage where they are. So we've spoken on here before. Ethereum is TradFi. If you want a comparison, Ethereum is TradFi. It's the blockchain internet, the computer blockchain, whatever you want to call it. Smart contracts, TradFi, it's all over there. Solana is retail. Retail, absolutely. Bitcoin, store of value, inflation hedge. They're the three at this moment in time. Maybe with XRP on the side, cross-border payments, all that kind of nonsense. Solana is now directly going head-to-head with Ethereum. But there's a caveat. TradFi will go to Ethereum, and then TradFi will port over to Solana. It's a win for Ethereum, and it's a win for Solana. Solana and Ethereum, a little bit like Batman and the Joker. Okay? Without Batman, the Joker would run riot. And without the Joker, Batman would not have a reason to exist. Capital markets are great on Ethereum because that's where the liquidity is. It's stable. It's built to have 365, 24/7 stock exchanges. But it doesn't have retail. Retail is on Solana. So you need both. One will probably not succeed without the other. You need the retail and you need the capitals, the capital side, the TradFis. You need them both. But you can't go to Solana if you're TradFi because Solana is a little bit flaky and it is known from time to time to go down. Even for 10 minutes, it goes down. It will ruin its reputation. So the TradFi guys have made the right decision. They've gone to Ethereum. Got plenty of layer 2s over there like Arbitrum and the such. That's a great place for them to be. But the money, the retail money will be on Solana. So you need both. I wouldn't call them Batman and Robin. Definitely Batman and the Joker in this case. So keep an eye on this because the other thing is, and this is a very key sentence here, this sentence here, okay? Anyone with an internet connection has access to capital markets. This is where there's going to be a problem. If you're in India, if you're in the UK, if you're in Portugal, if you're in Africa somewhere, this requires regulation. If you are in the UK and Solana intends to build this, you are going to need the licenses to operate in the UK, Europe, Africa. You're going to need those licenses. And this is where the likes of Binance and other exchanges have been working for the last 5-6 years to get these licenses. You can't just rock up and say, anybody, anywhere in the world can come and buy anything they want on Solana. It doesn't work like that. Where is the protection for the individual? Where is the protection that somebody comes along and buys $1,000 worth of Pump.Fun token and a week later it's worth $400? That's not protected. Somebody comes along and buys X Tesla in the UK through Solana, and X Tesla goes down 99% because it depegs against the Tesla stock. Who's responsible for that 99% loss? Not the Financial Services Commission, not the Financial Conduct Authority, whatever it's called. So who is going to protect the end user, which is you? Just because you can doesn't mean you should. And this, for me, and same applies to Ethereum, this is going to be an issue. Okay? Because what you will need for this to really, really work is you're going to need partners to power this in the UK, in Europe, in America, in Africa, in Asia. You're going to need TradFi to be able to provide the licenses to do this. Now, that may mean that if you are in Europe, you have to use Company A. If you're in the UK, you have to use Company B. But don't think that this is going to go unnoticed by all of the different authorities around the world. I said the same thing when, what was that called? Was it WorldCoin, where they scanned your iris? They're going to go around the world and scan everybody's iris. And I'm like, I don't think that's going to work. They're going to get shut down. It's data protection. They can't just wander around the world taking scans of people's irises without the EU or the UK or whoever. And in the end, it was an African country, an Asian country that pulled them up on it. And then they had to kind of like pull back. Just because you can doesn't mean you should. And maybe they've already got plans in place with the likes of BlackRock. Maybe Vanguard is involved. Maybe Goldman Sachs is involved. Maybe the companies that have got offices in the UK. But remember, again, another thing with this is, if you are in the UK and you make a profit on your ex-Tesla stock, that profit has to go back to the UK. So there has to be reporting mechanisms in place. This is not as easy as typing this into a document. And maybe they're very clever people. Maybe they've already thought about this. But I don't think they have. And I don't think they care. They're going to build it first and then worry about it later, which is what Jobs and everybody else has been doing for the last 25, 30 years. They build something and then they worry about the problems later. Remember the old adage, agree to it even if you don't know how to do it. That seems to be the motto. Right, let's move on very quickly. Let's make a check over there. Lots of people in chat. Hello, everybody. Follow me, follow you. I'm not following you. Bangladesh, where are you from? Thank you. Check XRP. Which coin should I buy for spot? Says Imtaz. We can't give financial advice, number one. But number two, I would buy any coin in the top 8. So excluding stable coins, your safest bet right now is to look at the top 8 coins. If you want something outside of that, you look at Hyperliquid, you look at Sui, you look at Chainlink. Look at the coins that have got eyes on them. That would be my advice. Now then, you know, I haven't even mentioned what happened with Syrup, which we'll do probably at the end. But anyway, we'll get onto that in a minute. Now, Athena Partners, $3 billion anchorage to launch first Genius Act compliant stablecoin. Now, I made a video about Orbi. They have a stablecoin called USC, which is an over-collateralized, soft-pegged stablecoin. So, although it's pegged to $1 and it's over-collateralized, it's not backed by USD. Athena, if you remember, maybe a year or so ago, I made a video about Athena and I said, stay well away from this. This is a bad idea. It was offering 18% APR on its stablecoin. I don't care what you say, you do not generate 18% on a stablecoin. That's not how it works, ladies and gentlemen. If you have a USD-backed stablecoin and they've got it in American treasuries, you should be looking at 4 to 5% return. That's fantastic. What does your bank pay you? 1%? So it's 4 or 5 times what your bank would pay you. Be happy. I didn't like Athena at the time, but it's got mass adoption. And I'm still not going to like it just because it's got mass adoption. At 18%, it's a time bomb. But they are going to launch a compliant stablecoin. Now, I've obviously read the Genius Act. I read it when I was making the video about Orbi. And there are a couple of things in there. Number one, it's not allowed to offer a yield. And number two, it has to be backed by US dollars or treasuries. So it can't go out and back itself with Bitcoin or Ethereum or Solana. Now, this is the interesting thing, is just because you have one stablecoin that happens to be an algorithmic stablecoin, it doesn't mean you can't have a second one. You could have USDE, which is the Athena stablecoin. You could then have USD E1, okay? And that is a stablecoin backed by US dollars. Therefore, it's hard backed $1 to $1. There's no reason you can't have 50 stablecoins if they're backed by the actual currency. There's no reason you can't. You can have 50 algorithmic stablecoins and 50 fiat-backed stablecoins. You can have as many as you want. There isn't a golden rule that says, well, Athena has got one stablecoin, it can't have another. Of course it can. And look at Pump.Fun. There's 11 trillion crap coins created out of that thing every month. You can do what you want. But they've partnered with Anchorage to do this. So they are going to go using Anchorage Digital to roll out a stablecoin for the American market. Parties are aiming for the stablecoin to be the first compliant stablecoin as everybody scrambles for it. It's teamed up with Anchorage. Now, also, bear in mind, I think there is a 2-year window. You have 2 years to become compliant with the Genius Act. So it doesn't have to be done tomorrow. You're not going to be fined from the 21st or whatever day Trump signed it. Was it the 18th, 19th he signed the act off? You're not going to be fined from day one. You've got 2 years to comply. So you have a grace period. You have a window to do that. The partnership between the first federally chartered crypto banks and the stablecoin issuer is an attempt to comply with the Genius Act. We're proud to support Ethena in bringing their product to the US, helping deliver even greater transparency and confidence to their partners. Anchorage Digital CEO Nathan Macaulay. As stablecoins become a foundation layer of modern finance, it's essential they build on infrastructure that's secure, compliant, and built to last. We're not going to go into this in too much depth. In fact, what time is it before we talk too much about this? 25 minutes. I think there'll be an IPO. Absolutely, of course there will. Everyone is going to IPO. I've said this from the month that Trump won the election. I said every company worth its salt has 4 years to IPO. That's what I said. We don't know who's coming after Trump. People are talking about Tulsi Gabbard and JD Vance. I like Tulsi Gabbard. I think she's really presentable. And I never thought about her becoming the president of America until it was mentioned a few days ago. She could win. JD Vance has no chance of winning the presidential campaign in 2028 because he's not restrained enough. I don't believe he's got the standing to run. I think Tulsi Gabbard has. That's not to say that the other side aren't going to have a better candidate as well. But irrespective, 4 years to ICO in the most pro-crypto environment America has ever had. I would expect Circle, Tether, Ethena. I would expect maybe crypto. Oh, can't mention the name. Maybe the other top tier crypto exchange. Maybe they will also ICO. I would expect. Who else is there that would ICO at this rate? Tron, maybe? I don't know. I would expect all of them to ICO. Absolutely. Why not? It's the perfect time to do it. So, they're going to launch this. It's going to be called USTB. Now, we're going to have to come up with a better naming convention, okay? Absolutely going to have to come up with a better naming convention than these. These are terrible. It's going to be the first to lean on the stablecoin issuance platform from Anchorage. We're proud to support Ethena in bringing their product to America. We just said this bit, haven't we? The passage of the Genius Act provides the regulatory clarity that enables federally regulated institutions like Anchorage Digital Bank to fully participate in the stablecoin ecosystem. Again, incredible news. We're going to move on. But what I will say is this. There will be a point where everybody has their own stablecoin. And what will happen is there will be a UI change. Binance already does it, I think, to some extent. If you've got $1,000 and it's Bank of America, $1,000, and then you send it to Binance, Binance might convert it into FUSD, which is their stablecoin. So then you end up holding their stablecoin because there's a swap. You don't notice any of that because when you look at it on the exchange, you'll just see USD. PayPal. You might have $10,000 in PayPal USD sitting in PayPal. You might send that to Binance again. It gets sent automatically. It might sit in PayPal USD on Binance, but Binance will show it you as USD. So I think what we're going to see is we're going to see a UI change. Okay? It's long term. It's a long-term UI change. And the same with Bitcoin. Things in the future are going to be quoted in Satoshis. I've been saying this for 2 years now. The day you walk into a coffee shop and you can pay for your coffee with 100 Satoshis is the day we've really hit adoption with Bitcoin, because that's the key. Whether we get there or not is a different matter, and whether we just end up with stable coins for transactions is a different conversation. But that switch from thinking in Bitcoin to thinking in Satoshis should also make you understand what the value of Bitcoin is going to be. In 10 years' time, if Bitcoin is worth $1 million, you're going to go in to buy a car. And you might want to buy that car, and they might say that's going to cost you 0.02 Bitcoin. It starts to become unusable. Okay? So I think we move from Bitcoin to Satoshi. I think we move from all of these spurious stable coins to USD, and it's all called USD. That's where I think we're going to go with that. Now, we did cover this, but not in massive depth, and this has really kicked off in crypto Twitter. This has really kicked off because, again, we'll go through it and I'll explain what I said on Tuesday, and then I'll give an update. So Chris Larsen dumped XRP amongst the 10 reasons behind the price crash. XRP's price crashed as he transferred 50 million XRP worth $175 million in a week. Uncertainty around settlement in the Ripple versus SEC lawsuit impacted investor sentiment. The price chart dropped as the RSI signaled overbought and key support was lost around 336. Okay. First of all, any coin that goes up at the rate that XRP goes up is going to come down irrespective of Larsen. Okay? Any coin that runs 50-60% in a very short space of time is going to retrace. It's retraced to $3. Where was it 2 weeks ago? It was at $2.20. We're up 40%? 30% up? 40% up? And people are calling him out. The recent price crash of 18% dropped from 365 down to what it is today, 310. So we've had, 15% correction? Really? The reasons include Chris Larsen joining entities selling XRP, a delay in the lawsuit, and technical chart weakness. Honestly, and I'm not defending him because I don't know him from Adam, those two are the reasons for me why the price came down. It got overbought. I told you on Tuesday, somebody asked about a coin that had really run up, and I said, I do not chase green candles. And I would advise you not to chase green candles. That's the worst thing to do. You wait for a coin that you like to be in the trenches, and you buy it. And the trenches are what we call the kill zone. Okay? The fib level, the red area of the fib level, we call it the kill zone. That's the time to pick up these tokens. XRP was there at 30 cents, 35 cents for a very long time. So was Cardano, down there 20 odd cents. No longer there. We've moved up. We've moved up a long way. I think the lawsuit closing against Ripple will give it another pump up because it's closure. And I think the chart will cool off. If we cool off to 275, why are we complaining when it's up 20% from where it was? So, 106 million XRP worth over 344 million has been moved since the start of the year. Zach noted that a wallet linked to Larsen transferred 50 million with 175 million to 4 different wallet addresses. Among them, $140 million of XRP moved to crypto exchanges or related services. This is a notable amount from the Ripple executive to build selling pressure. In addition, 2 wallets received 30 million XRP and a wallet got 10 million XRP. Okay. Now, number one, what I said last week was we do not have rules and regulations in crypto to stop this from happening. We also don't have rules and regulations in crypto for this to be announced. I used to follow stocks a lot more than I do, and I used to follow the notes on the stocks, the news releases. And when a CEO or a member of the what's it called, the board, when they sell their tokens, it's noted on the news. So if, for example, the CEO sells 10,000 tokens at £10, they make £100,000. People look at that and think, he's just taking a bit of profit. Maybe he's buying his wife a present or his husband a present. When you see a CEO dump 10% of their holdings, that's always going to suppress the price. We don't have any of that in crypto yet. I do think that's something that we need to have. We probably need a better monitoring tool where the likes of Vitalik, the likes of Chris Larsen, the likes of Brad Garlinghouse and everybody else, they have to make their wallets publicly available so we can see what they are doing. And we need some kind of mechanism so we can see this kind of stuff. We do not know he sold all of that XRP. We don't know how much he sold because he sent it to an exchange. That's the grey area. Is he wrong for doing it? No. Is he right for doing it? No. It's a grey area. He's neither wrong nor is he right. Had he come out and said, over the coming months, I am going to be selling off some XRP because I want a bigger house. Okay, I want a bigger house. I want to get myself a yacht. I'm going to be selling XRP, but I'm not going to sell a lot of it. I'm going to sell little bits every month so there's no sell pressure. That's totally different to randomly sending 130 million XRP to an exchange or various exchanges, and then suddenly the price drops because it's coincidence. It got overbought. 365 from where it was a 50% move. It was always going to come down. I don't blame him for that. I don't blame him for selling, but I also don't blame him for not saying that he hasn't sold. I think it's one of those situations where morally he should have said something. That's my opinion. But that's down to Hester Peirce and the SEC and the guy that's in charge of the SEC now. That's down to them to make this decision because, just because you can doesn't mean you should. Just because you can just transfer all of your coins to an exchange and sell them doesn't mean you should, because you're dumping on the community. If you come out and say, I'm going to be selling 10 million XRP or 5 million XRP and I'm going to sell it over a period of 6 months, because I want to do things, I think the community would understand. Now, this is what I talk about an awful lot on here, and it's something I want you to understand. If you invest in a company or a project and you don't know how it makes money, just send all of your money to me. Just give me all of your money, and what I will do is I will hold on to your cash, and then in 2 years' time, I will buy all of the tokens that you were going to buy today. I will buy them all at 99.9% down from where they were, and I will send them to you, and I will then give you 10% of your money back. So you haven't lost everything, okay? There's the deal. Can't say fairer than that. Nobody, and I mean nobody, on crypto Twitter sits there and says, that company over there doesn't make any money. That company over there doesn't have a roadmap to making money. What that company has is lots and lots of unlocks where their shareholders hype the price, and then sell to you. Okay? They make a lot of money. You don't make a goddamn cent. Okay? And that's why you buy the top coins. That's why you buy the Ethereums and the Bitcoins, the Solanas, the XRPs, the Cardanos. That's why you buy them. The market caps are a lot higher, therefore they're a lot harder to crush the price. If you go out and buy Compute 3 AI, what a great example, okay? I think it's got a $3 or $4 million market cap. Let's say that the owner of that token wants to dump on you, okay? There's only probably $200,000 worth of liquidity in it, so it's not going to get anywhere, okay? But let's say it goes to $100 million. No, let's say it goes to $40 million, and let's say it's got $2 million worth of liquidity. He can take $2 million and run. So tokenomics are massively important. How the tokenomics work, who has what, who holds what, how they're unlocked, all of those things make a massive difference to how you should look at a project. In fact, I got a DM this very week saying, how do I learn to analyze projects? I don't think the person who asked it me is in chat today, but they asked me, how do I analyze projects? And the two things are that you should ask yourself, how does it make money? And the follow-up to that is, how does it intend to make money? So that's kind of question one. Where is the revenue and profit model of that project? That's the first thing you need to look at. The second thing you need to look at is who holds what tokens. And then say to yourself, who can dump on me? They are two important things. Probably more important than anything else. Traditional staking rewards, capital over contribution, creating unsustainable token economics. Tokenomics futures lies in performance-based tokenomics that reward measurable work. Again, I've seen this conversation many, many times before, and it is key to what's important. Staking was the gold standard in crypto. Stake tokens, secure the network, and earn simple, elegant, and trustless rewards. Somewhere along the way, we drifted. Staking stopped being about contribution and started being about capital. Rewards ballooned, emissions exploded, and tokenomics shifted from supporting long-term infrastructure to chasing short-term yield. The hard questions were forgotten What's truly being rewarded and at what cost? What real work is being done and what happens when the rewards run out? Now, I'm going to give you a great example of this in a second. What if, instead of staking capital, we begin staking effort? What if tokens were distributed not based on wallet size, but on meaningful contribution? That's the vision behind performance-based tokenomics. Participants who compute, maintain uptime, process transactions, onboard developers, users directly rewarded by their influence. The objective isn't to distribute tokens, it's to align incentives with the network's actual growth and utility. The model offers sustainability and credibility. It fosters ecosystems where rewards are earned, not inflated, where capital flows towards productivity rather than speculation. The efficiency, or efficacy of token incentives in DeFi reinforces the fragility of emissions-driven ecosystems. The study found that protocols heavily reliant on inflated token rewards, or SushiSwap, whatever it was, they end up losing their value. Now, again, we're not going to read any more of that because I want to focus on something. Why did, what was it called now? Begins with a C. Anyway, it'll come to me. If you have a new blockchain, you incentivize people to come to your blockchain. And that incentive is normally in the shape of airdrops. And those airdrops are farmed by a group of people. And then on day one, all of those tokens are sold and all of that liquidity leaves your platform. Celestia ranged between $12 and $20. I don't even think it's $2 or $3 now. Airdrops are wonderful ways of rewarding users for their loyalty. In the past, airdrops that reward people coming to a chain and staking Cell token and whatever else it might be, they are going to get farmed and dumped on. It's trash. How should you do staking rewards and look at tokenomics? You should probably look at maybe Bitcoin and Ethereum. Bitcoin rewards miners for an awful lot of hard work and infrastructure outlay and costs, manpower, electricity. That's how it rewards people. And then you go and buy that token because it holds its value. Ethereum, I said before, it's almost deflationary, but only slightly inflationary. Why? Because the more the network is used, the more is burnt. The staking element of that is a very negligible 2%, 2.5%. So there is a fine balance in place. Now, if you're going to pick a scenario, proof of work probably is never going to exist into the future past Bitcoin anyway. So maybe look at proof of stake. Look at the way that the tokens are burned and look at the way they're emitted. Another great example is maybe Solana. Solana started off with about 15 to 20% APR. Totally unsustainable. Over time, that's now dropped to 5 to 7%. In the very near future, it will drop to 3 to 4%. That's the future. But they need to burn tokens along the way. So the tokenomics of you staking are not just a case of you staking and sitting back and watching. The tokenomics of this should be that you pick a chain with activity where things are being built and those builders are being rewarded in that token because they are building value on that chain. That's the key. If you come along and you see a new token called Oracle, and Oracle is offering you 35% APR and the token is $1, so if you stake 100 of those tokens, you're going to have 135 at the end of year one. You're not, because the token value more than likely is going to go from $1 to probably 66 cents. So your token over that year has dropped in value a third, but the actual amount of money you've got is about $100. And what they are hedging their bets on is driving that many people to buy the token that it pushes the price up so it stays above the amount that's being emitted. That is not sustainable. When you look at buying into a project and you look at a project and 85% of those tokens are locked, and the owners hold 85% of the token, and 15% of the token is in circulation, and that circulation is worth $1 billion. The second those tokens unlock, that $1 billion token, sorry, that $1 billion project will still be worth $1 billion, but your token will be worth maybe 12 or 13 cents. And that is what people don't understand. They don't understand the numbers of tokens in circulation can go up, but the market cap can stay the same or increase slightly below the amount being pumped into circulation. So the actual value of your token falls, but the value of the project goes up. And that is something absolutely fundamental that if you don't understand tokenomics, you need to go and do Tokenomics 101. It's so absolutely vitally important. That's why I am so bullish on the likes of Jupiter. They burnt 30% of their tokens this year. They've got a buyback scheme in place, which is basically buying millions and millions of dupe every single day and sending them to the trash can. Now, maybe it doesn't affect the price today. Maybe it doesn't affect the price for another 6 or 12 months. But mark my words, in the next 2 or 3 years, they're going to be buying the same amount every single day. That token will go up in value. And if you find a DEX that has a burn mechanism where they burn 25% of their fees in their own token, that's a long-term buy pressure on that token. That's what you're going to look at. It's all well and good you buying because of the hype, but you are exit liquidity for everybody else. Look at projects, look at the tokenomics. It's so important. I cannot stress enough how important tokenomics are to a project. And again, if this was stocks and shares and you were looking at a token issue or a share issue and you don't take part in that share issue, the value of your shares will fall by roughly whatever tokens are issued. That's what you got to bear in mind. Anyway, I am going to move on. Rav, I am not talking about today. I am talking about when I made the video that I released 18 months ago or a year ago when Athena first launched its token, when it launched its algorithmic stablecoin. When it first came out, it was paying 18%. 18%. Way back, beginning of last year maybe, whenever it launched, and it launched on Binance. I made a review video of it. That's a long time ago. And as I said at the time, I don't touch anything that pays 18%. So that's where the 18% comes from. Not something I've just made up off the top of my head. It was actually what they were offering early doors. When it was sub $1 billion, I think it was a few $100 million market cap. So yeah, they have come a long way. I'm not saying they haven't, but the point of the matter is I didn't trust it back then because it was an algorithmic stablecoin and it had a very low market cap. Now, another thing we talked about very briefly at the start. How long do we have left, by the way? 2 minutes. Crikey. What's the next article after this? We're not going to talk about the last article. We'll just do this one, and then that will be it. Right. Pump falls 15% after founder confirms no immediate airdrop. Again, I said the strategy with Pump.fun is very simple. Don't buy it. Wait for it to bottom out. Wait for the sell pressure to go. And if you think Pump.fun is going to make it, you buy in at the bottom. This token has not seen all of its sell pressure yet. But I do think they have some plans for it. And I'm not going to buy it, and I've said this before, but if they have a mechanism in place where they are going to offer you some kind of rewards or staking the token or holding the token or whatever it might be, then I think it's possibly going to go back up in value. We're sub 1 billion now in value. That's a good place for it to be. Not saying it can't go to 400 or 500 million or 300 million, absolutely not. But I think there is something very fishy about this. I think there's something they're not telling you. And I think what they're doing is they are waiting for the price to bottom out to then start to apply buy pressure to it, to then suck up the supply And then when they hold enough of the token, they will be sitting, as I said at the start of the show, they'll be sitting on maybe $1 billion in cash, and who knows what percentage of the supply they're going to have. And then what I think they're going to do is some kind of profit share or airdrop of the tokens that launch or whatever it might be. That's what I think they're going to try and do. But I can't prove any of that because I don't know. It's just hypothetically speaking. But the reason it crashed, it's 15% below its ICO price. I think it's even lower today. The surge of sell-offs was the airdrop farmers leaving because he announced there was no airdrop. The plunge highlights meme coin volatility risks. Totally agree, but this isn't a meme coin. This is a token of a project that makes millions and millions of dollars in Solana. So I wouldn't classify it as a meme coin as such. It has nosedived. Crucially, this descent pushed the token price below its ICO level of approximately 0.008. Trading volume spiked as they reacted to the news there was no airdrop. Fantastic. The rapid decline erased a substantial portion of the gains it had accumulated over the previous weeks. No airdrop coming. Again, I don't want to talk too much about this because it's the end of the show. What I would say about Pump.fun is I am not an absolute fan of this project. Okay? I don't like the project as it is. But what I will say is this. If you can make money out of a coin, everything I say is irrelevant because it's my opinion. If you think Pump.fun is going to launch a burn mechanism, a buyback scheme, a reward system, an airdrop system, then we're probably getting towards the bottom of the price for this token. That's option one. Option two is this was a massive cash grab where they've taken $1.5 billion and they're going to do a runner and they're going to leave the token to die. But they are buying back the token. That's an undeniable fact. They're buying the token back. But this is not the usual pump and dump that we cover on here. If it was a meme coin, obviously it goes to 500 million and then goes to $10 million the following day. All liquidity sucked out. Fine, I get that. I don't think this is the case. I'm never going to buy this token. I'm putting that out there. I'm never going to touch this token. I don't believe that this has been a positive for Solana. All they have done is already made hundreds of millions of dollars. So I don't like them. Morally, it's wrong. As I keep saying, just because you can doesn't mean you should. They've tarnished the reputation of Solana. They've gone after Raydium by launching their own DEX. And now they've issued this ICO where the value has now fallen below the ICO launch price. Considering it's such a successful project, to go below the ICO price, not a good sign either. So I think there's something up with this. I think there's going to be a rebirth. A little bit like Pudgy Penguins. Had you held Pudgy Penguins from the airdrop to now, you'd probably be up 3 or 4x. Maybe they're going to do the same. They're keeping the news until there's max pain, and then I think they're going to drop the news of whatever it is they've got planned for the token. Syrup news. Very well remembered. Now, I can't bring up... Oops, wrong one. I can't bring up the listing because the listing is a different exchange. So what I'm going to do is very briefly show you the Syrup price. Right. We're up 20% in the last 24 hours. Syrup was listed on the biggest South Korean exchange, some other exchanges. It's not gone up based on anything else. Now, what that means to me is that this token will do, just to give you an idea of the price targets for Syrup. Because again, channel is sponsored by Syrup. But just very quickly, let me show you the tweet that I put out about Syrup because it's important. If you don't like Sydney Sweeney, my Twitter account is not for you. Let's just put that out there, okay? You should... I put out... Here we go. So, this is it, okay? This is a Britney Spears themed tweet. 2 cents and 56 cents. In the immortal words of Britney Spears, I'm stronger than yesterday. Syrup is stronger for this profit take. 56 cents. Now, 56 cents, that's the key to look at here because Syrup's really good at price action. Now, what I mean by it's been at 52, 56, and 65. Where did it go? It went to 65 cents. It's now at 59 cents in the next few days, or continue to go up depending on the buy pressure from the new exchange. The reason I say that is when a coin gets listed on a new exchange, it gets a massive pump, and it will spike. You know the Binance spike. It will rocket. And then what does it do? It will retrace to a higher price. 52, 56. That's what I think we're going to go. 52 or 56 cents is not a bad price for syrup. I've got for syrup in my head is between $1 and $2 by the end of the year. I don't want to give you a higher price prediction for syrup because I don't think it's fair already. And there is a direct cause and effect of syrup, which I talk about a lot. You should care not is this. If you want to watch a chart on syrup, forget the price. Price is irrelevant. Remember, project and price, two separate things. You, the most ridiculous looking thing you've ever seen. Now, if I came onto this stream and I saw somebody showing me this chart, I would think, what a load of mutts nuts. Who is this guy showing me this? It's under management of Maple. We started off at some point in the future because it looks like the national debt of the United States. But this number here is the number I want you to keep an eye out on. This is the AUM, 3.144 billion. They were conservatively looking at $4 billion by the end of the year, back in January, March time when we were talking to them. We're probably going to hit $4 billion by the end of August. That gives us September, October, November, and December. That gives us another third of the year. So conservatively, let's say we go to 8 billion, 7 billion. The price of the token is currently 60 cents. So conservatively, maybe $1.20, maybe by the end of the year, would be the average, probably if you do AUM versus token price. But that doesn't include the FOMO and the speculators out there, which is why maybe $2 is right. But conservatively, I think a minimum of $1, and then it'll run to maybe $1.20. But again, I keep saying to you guys, I'm expecting a summer lull. I'm expecting a correction. And lots of people in chat, you ask anyone that's looked at the Bitcoin or the markets over a 4 or 5 year period, August and July, and I know we're near the end of July, but August and July are normally times when we have a slowdown. If I'm wrong, I'm wrong, and I'm sorry. But there we go. Anyway, it's now 10 past. Yeah, winners at the top, exactly. So expect $1 plus for Maple. Anyway, I'm going to go because I'm eating into your weekend. Thank you, everybody, for turning up. I'll see you all on Monday morning. Next week, we have the Mew quiz night on Wednesday, 7 p.m. Central European Time, 5 p.m. UTC. Make sure you turn up for that. We give away prizes. I've already given away the moon from last week. Already done that. Okay, so get off my back. But what I haven't done is paid out the syrup from the week before, so I need to go and do that. Anyway, thank you, everybody, for coming. Have a great weekend, and I'll see you on Monday. Take care.